What is going on, everyone? Welcome back to the channel. Today, we need to have a very serious, deep dive conversation because the financial markets aren't just shifting. They are undergoing a violent transformation. If you have looked at your portfolio in the last 48 hours, you probably saw a sea of red. Gold and silver are falling at the fastest rate we have seen in over a decade. Bitcoin, which many thought was on an unstoppable trajectory to six figures and beyond, just had its legs cut out from under it, dropping back into the $70,000 range. Now, why is this happening? Why did the safe havens suddenly become the danger zone? It all comes down to a massive power shift at the most powerful financial institution on the planet, the Federal Reserve. President Trump just made a move that effectively crashed the fear trade. And if you are an investor, you need to understand the mechanics of why this happened so you don't become the person panic selling at the bottom. To understand the crash, we first have to understand the boogeyman that investors were running away from. For the last year, there has been a massive cloud of uncertainty hanging over the US dollar. The Federal Reserve, our central bank, is responsible for setting economic policy. Specifically, they control interest rates and the money printer. But here's the thing. The Federal Reserve isn't actually federal. It is an independent entity. President Trump has been incredibly vocal and critical of the current Fed chair, Jerome Powell. He has demanded interest rates as low as 1%. He has publicly stated that he wants the U.S. to have the lowest rates in the developed world to fuel a massive economic boom. More importantly, he has suggested that the Fed shouldn't be independent at all, that it should take its cues directly from the White House. To a gold or Bitcoin investor, those words sound like music. Why? Because if a president can force the Fed to print money and slash rates to zero whenever they want, the dollar will eventually lose its value. This is exactly why gold and silver have been on a tear, even outperforming the stock market over the last 5 years. People were buying gold as insurance against a future where the dollar is sacrificed for political gains. Gold is a unique animal. Unlike Amazon or Google, gold doesn't produce anything. It doesn't innovate, it doesn't have a CEO, and it doesn't pay a dividend. It just sits there. You buy it because you are concerned about inflation, government spending, and the stability of the economy. Historically, there are only a few times when gold beats the stock market. The Great Depression, the stagflation of the 1970s, the 2000 dot-com crash, and the 2008 financial crisis. The fact that we have been in one of those periods recently tells you exactly how much fear was in the system. But that fear just hit a brick wall. Jerome Powell's term is up in May 2026, and the world was waiting to see who Trump would pick to replace him. Would it be a yes man who would print money on command? No. Trump announced his nominee, Kevin Warsh. The moment that name was announced, the gold and silver markets collapsed. Kevin Warsh is a name that carries massive weight on Wall Street. He served on the Fed board during the 2008 crisis under Ben Bernanke. Back then, he was known as a hawk, someone who is very cautious about inflation and prefers higher interest rates to keep the currency strong. Investors breathed a massive sigh of relief because Warsh represents stability. Wall Street's take is that Warsh isn't going to be a sock puppet. He has publicly advocated for the Fed's independence. While he does agree with Trump that interest rates should come down, his method is what changed the game. Warsh argues that we can lower rates if we simultaneously shrink the Fed's massive $6.6 trillion balance sheet. In plain English, he wants to lower the cost of borrowing, but pull back the excessive money printing that has been happening since the pandemic. He believes that by cleaning up the Fed's bloated balance sheet, we can have growth without the hyperinflation everyone was terrified of. He is also betting big on an AI productivity boom, arguing that technology will allow the economy to grow so fast that inflation naturally stays low. The second that dollar apocalypse scenario was taken off the table, the reason to hold massive amounts of gold evaporated for many institutional traders. This triggered a massive sell-off, and when gold drops 5% and silver drops 10% or more in a day, the tourists get scared. Think about the people who bought silver at the top of the run-up in late 2025. They weren't buying because they understood the Fed's balance sheet. They were buying because they saw a headline and wanted to get rich quick. When the price started to slip, these people panicked. They sold. That panic selling created a snowball effect, making the crash look much worse than the fundamentals might suggest. This is exactly where you have to decide what kind of investor you are. Are you the person who chases headlines, or are you the financially savvy investor who understands asset cycles? Let's look at the history of these cycles. After the 2008 crash, everyone was terrified of hyperinflation because of the quantitative easing or money printing the Fed was doing. Gold prices boomed and broke record highs between 2008 and 2011, but by 2012 it became clear that the dollar wasn't going to collapse. What happened? Gold prices fell for 8 straight years. 8 years. It wasn't until the 2020 pandemic turned the money printers back on that gold finally started breaking records again. We are seeing a similar pivot right now. The risk-off trade, gold and silver, is losing steam because the risk-on sentiment is returning. Even Bitcoin, which is often called digital gold, is being treated more like a high-risk tech stock right now. It got hammered because the immediate need for an alternative to the dollar felt less urgent once Kevin Warsh was nominated. Now, does this mean you should dump all your gold and silver and buy stocks? Absolutely not. That is the chasing mentality I'm trying to help you avoid. The people who build real wealth are the ones who have a strategy that fits their life. Some people get rich only with real estate, some only with stocks, some with Bitcoin. The key isn't the asset, it's the discipline. If you have gold in your portfolio as a 5% or 10% hedge, a price drop isn't a disaster. It's an opportunity to rebalance. The financially savvy investor is currently thanking the panic sellers for giving them a discounted entry point. You have to remember that 2026 is going to be a year of incredible volatility. We are just getting started. Once Kevin Warsh actually takes the seat at the Fed, the real craziness begins. There will be headlines every single week about Trump demanding one thing and the Fed doing another. There will be debates about the independence of the central bank. These headlines are designed to make you emotional. They are designed to make you trade frequently so that the big institutional players can profit off your panic. My goal for you is to be the person who watches the news, understands the why behind the movement, and stays calm. If you know that gold is your long-term insurance policy, then a 10% drop shouldn't change your life. If you know that Bitcoin is your bet on the future of digital finance, then a dip back to $70,000 is just part of the ride. The markets are currently re-anchoring their expectations. We are moving from a fear of the dollar dying phase into a let's see if this new Fed can actually balance growth and inflation phase. This transition is messy, it's loud, and it's expensive for those who don't have a plan. On Monday, I'm releasing a full-length, comprehensive breakdown of exactly what Kevin Warsh plans to do with the Fed's balance sheet and why his AI productivity theory could either save the economy or lead us into a brand new type of crisis. You do not want to miss that analysis because it will dictate where the smart money moves for the rest of 2026. We are living through history right now. The structure of the global financial system is being debated in real time. Stay educated, stay disciplined, and most importantly, stop chasing the green and running from the red. Understand the strategy, and the wealth will follow. If you enjoyed the video, like, share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important analysis update. Thanks for watching, and I'll see you in the next one.